all, and welcome back. I hope you're all doing really well. Just wanted to say thank you for 3,000 subscribers. Just hit that milestone recently. I did publish something on the YouTube communities tab, as well as a tweet showing my gratitude towards all of you. Of course, this video content will not stop. I will continue to publish videos right out into the future, and hopefully looking forward to growing the community even more. As I said, just a big shout out to all of you that are subscribed. And if you aren't subscribed, which I know majority of the viewers actually aren't, please do so, as you won't miss out on any of this content going forward. I have lots of different stuff in the pipeline that I'm working on behind the scenes, and hopefully I'll be able to share some of that with you guys very soon. Right then, jumping into some of the news, tons of different stuff going on in the crypto markets, as well as for some of the cryptocurrency projects we talk about a lot. Projects, of course, like Hbar and Quant, and some others as well behind the scenes. First thing I wanted to touch on, though, is what's actually happening again on a macro scale. Here's something that I found over on the Data is Beautiful Reddit thread. I actually urge a lot of you to take a look at that if you get the chance. It's full of fantastic information to do with macro level news. Anyway, we can see the currencies weakening relative to the US dollar on the year-to-date cumulative spot return. And across the board, what you can see for these major currencies is they are taking a massive beating in relation to the US dollar. So we can see here somewhere around the middle, the Japanese yen and the Great British Pound sterling are both down 19.7 or roughly 20% down against the dollar. You've got others like the Australian dollar down 16%. The SEK is also down 19.9%, and a myriad of other currencies are falling. Now, unfortunately, obviously what this means for the majority of the markets is that purchasing power, that parity between different countries is continually falling. And then people tend to talk about this in terms of the chart called the DXY, which is of course the dollar strength index, which you can see here continues its parabolic rise while it increased 3% this week. Commentators are asking when and at what level the dominance of the US currency will end. The strong dollar translates into a weak performance of other global currencies, traditional markets, and cryptocurrencies. The Federal Reserve continues its policy of financial tightening alongside persistently high inflation in the US. This month saw another interest rate hike of 75 basis points, which we spoke about in the previous video, and the Fed's decision and the global macroeconomic situation favor the appreciation of the US dollar and the DXY index, which expresses its strength. The DXY measures the strength of the US dollar against a basket of 6 major foreign currencies. Among them are the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the British pound, and the Swedish krona. For example, an index value of 120 suggests that the US dollar has strengthened by 20% against the basket of currencies over a given period of time. In other words, the DXY is going up. It means the USD is gaining strength or value relative to other currencies. And this is why I talk about the Federal Reserve monetary policy so often in a lot of these videos, because it's directly correlated to what is going on with the US dollar, and then that affects equity pricing and cryptocurrencies on a global scale. Don't forget, the US dollar is the global reserve currency of the world. Now, if I scroll down slightly further, we can talk about the crypto sort of community comments of this, and something from the Coin Bureau as well. The single biggest threat to the global economy right now is the dollar strength. DXY is a wrecking ball that's taking no prisoners. And then we can see comments on the macroeconomic situation, high commodity prices, and the threat of recession. In his opinion, a Fed change in policy and weakening of the dollar is already on the horizon. And this is why I was talking about investors are pricing in that terminal velocity of the interest rate. Now, what typically happens in these markets is, of course, the interest rate is a measure of a risk-free rate for a traditional investor or institution. That is, in other words, the interest rate is a guaranteed return on capital with zero additional risk taken. For every percentage point or BP point increase in the interest rate, that risk-free rate begins to increase, and therefore you have to have even higher risk to reward ratios to take on risk, and that is what we're referring to when we talk about a risk-off environment. So a series of interest rate increases, which the United States has been doing very aggressively or hawkishly to combat inflation, has turned the dollar into a very high-yielding currency. Those lofty interest rates or risk-free rates are a draw to global capital. That is, people in the United Kingdom, in Japan, for example, sell their GBP or their yen into dollars because they will receive a higher return on a global stage, which therefore then pushes up the US dollar. This is a self-fulfilling prophecy and will continue until the United States turns around its monetary policy track and begins to lower interest rates, or at least hold interest rates where they currently are, which we all know the Fed has no intention of doing that until they bring inflation under control. And that is why you'll see many headlines about hawkish policy and why I talk about this a hell of a lot. The DXY continues increasing, cryptocurrencies and other equity prices will stagnate or either fall due to those rising risk-free rates. It is a well-oiled machine and has been so for the last few decades. Anyway, hopefully that gives you a bit more of an understanding of what's actually driving majority of these equity price changes and why monetary policy and the interest rates set by the Fed are so pivotal at the moment in terms of determining what happens throughout the global markets. Some more crypto news then. Fortnite developer Epic Games has just backed a metaverse infrastructure firm, Hedera'S, in a $30 million funding round. So these guys are looking to build inside the metaverse. This is another company, Epic Games, of course, that has set records in the past for bringing out sort of new content to the gaming world. And they're looking to do that again, and they're banking clearly on metaverse by investing $30 million. And we're seeing a lot of these developments across multiple different chains throughout the crypto space. And of course, we all know that it will be a big thing in the future. We can also see Goldman Sachs has just cut the S&P 500 2022 year-end target to 3,600 from 4,300 points. Now, again, we know there is a strong correlation between equities or the US markets, the S&P 500, and the cryptocurrency space. Of course, you're seeing these falling valuations for the year-end target. Just shows that the growth throughout the end of this year is probably going to continue to stagnate. Interest rates and inflation will remain high, and it doesn't look like we'll be seeing any type of rally for cryptocurrencies, at least not of significance, throughout the end of 2022. Now, we'll be looking forward to 2023. This, in my opinion, is not a bad thing at all. This gives me a greater opportunity, and for those of you guys that are looking at this as a long-term play, in order to continue building those positions for the next few months throughout 2022 and probably a significant chunk of 2023. Time is on your side. Don't try and time these markets. Time in the market is always better than timing the markets, as the saying goes. Looking at the crypto bubbles, though, we have seen some breakouts for several different cryptocurrency projects. I can see Quant down here on the bottom left. We're now trading at $121. Said to you guys before, I tend to buy this whenever we're sub $100, $80 to $100 range is where I like to buy. There were some calls as to whether this would come down to $50. Doesn't look like that's going to happen anytime soon. Potentially, if we see another significant drop in Bitcoin, a lot of these altcoins will slide further, and then you'll have a better buying opportunity. We can also see Ripple as well off the back of some news has appreciated 26%, which is fantastic. ALGORAND, another project we like to talk about over the last week, up 25% as well. Of course, I do hold a small amount of ALGORAND. It's another layer 1 blockchain that I am, or DLT, whatever you want to call it, that I'm fairly bullish on. Hbar, which I can't seem to find at the moment, hasn't been doing too badly either. And the same goes for some of the other projects we like to talk about. I wanted to quickly just run through this thread. I saw it over on Twitter, and it's a really interesting one, just giving a bit of an overview as to what quant is. I talk about it a lot in the videos, and I haven't done a sort of explanation to any of the newer followers of the channel as to what quant is and why I like it. I think this summarizes it quite well. So this thread covers the meaning, utility, team, tokenomics, partnerships, and everything you need to know about quant. So the meaning being, quant network solves a major issue, which is interoperability, and that's why I talk about it as one of my 2 interoperability plays. Simply means the ability of computer systems or software to exchange and make use of information. It's like using Ethereum, Bitcoin, or Solana all together, interoperability for different purposes. It's effectively a connection between the different chains that exist, and we know this is going to be a multi-horse race going out into the future. There's not going to be one project left at the top when all is said and done. There will be several different projects with different use cases and utility that will all be functioning, and you need something that's able to connect all of those things together, meaning that one chain cannot win the market. The future is multi-chain. While every other project can solve blockchain to blockchain interoperability issues, quant can solve any to any interoperability issues, meaning that whether it's a special purpose chain, smart contract chain, or a privacy chain, they can all integrate along with each other. And we can see that here via their use of Quant's Overledger OS. It has this ability to effectively plug into a myriad of different technology solutions and then send and route or pipeline data between them. The Quant network obviously has the product Overledger. It's like Mac OS or Windows for blockchains, meaning that it is an operating system of blockchains. So like every other system you need licensing fees, you obviously need Quant to buy the Overledger. Quant provides the most up-to-date data at all times and allows banking systems to interconnect with each other, just like Google Play Store and Apple Stores. Quant's ecosystem allows developers to build multi-chain applications or maps for users. Each map allows user smart contracts to work together on different blockchains. Projects creating their map has to obtain an annual license to develop their application on Overledger. Users also have to hold some quant in order to use those applications. So here we're beginning to see some of the tokenomics for quant itself. The maps can have paid subscriptions or in-app purchases, which have to be paid with quant. Other potential uses of Overledger as well being finance, healthcare, smart vehicles, supply chains, power grids, Internet of Things, virtual reality wearables, insurance, and many others. Of course, they've as well got a very good team with 𝗟𝗚𝗡𝗏𝗏, worked at governments for over 3+ years, as well as top private sector fintech with security and services. You've got the COO, 𝗟𝗚𝗏𝗏𝗏, as well, a healthcare background, and also held a director of economics role. Tokenomics, which is something I featured on the channel several different times. I've got dedicated videos or dedicated segments in videos talking about it. Total and circulating supply of quant is only 14 million, minuscule in comparison to many different things. For example, Bitcoin only having 21 million with nearly no use case. There's no inflation with quant either. Quant locked up in order to use the Overledger. The only interoperability platform. Users require quant in order to use that Overledger, and a small percentage is then held by the team. Increasing supply often leads to the saturation of the price of the token. This isn't the case with quant. Supply is 33% lower than Bitcoin. It can be said that if you believe the blockchain technology will grow, then quant is bound to grow. And then as well, they've got several different partnerships. You can see their Nexi Group and KPMG. Quant partner serving 80% of Forbes Global 1000. KPMG recommends Overledger to many businesses needing interoperability. Millions of individuals will start using the LATAM dollar in 2023, which is a currency built on top of LACChain, utilizing Quant's Overledger. And then we see 16 of the countries in Latin America and the Caribbean use LACChain. Enterprise marketplaces as well are an excellent form of distribution for software like Overledger. Quant has fantastic partnerships with Oracle, who's integrated Quant into their blockchain infrastructure and led to 430,000 customers via their cloud marketplace. Quant had an all-time high price of $430. We can see it's currently sitting at around $120, $1.4 billion potential market cap currently, with multi-billion-dollar in the future. And then the conclusion being that it solves interoperability. It has the Overledger, superb team with great connections, one of a kind, more scarcity than Bitcoin with high utility, as well as use cases, and then great partnerships with a good price to enter as we currently sit. Hopefully that gives you a bit of an update or an overview on what quant actually is. One of the reasons why I personally like it and think it will do very well in the future. And then of course, we said before, those quant tokenomics are obscene. You could be seeing thousands of dollars price per quant in the future based on those tokenomics. Right then, jumping across to our beloved Hedera, we take a quick look at what's happened over the past month or so. There's a great write-up talking about the end of the hot DeFi summer as we approach the autumn term, but lots of different stuff has happened over this summertime of 2022 for Hedera. It has been a roller coaster of a journey in terms of growth. Talking about the lowest carbon footprint, obviously that remains the same for Hedera itself. Lowest carbon footprint by any chain by a long shot, and we can even see lower than other sort of traditional products like Visa itself. Hedera's NFT ecosystem metrics, of course, I've been doing a lot of different videos recently. I've had some interesting comments from people saying NFTs are sort of dead, there's no money to be made. On the contrary, a lot of these mints have been returning really high yields for people. I mentioned in one of those comments, for example, if you managed to mint a ghost in DevPixels drop 3, there was almost an instant 7 or 8x from that mint price. And the same can be said for a lot of other of these blue chip projects. I will continue featuring them because for those of you that are obviously interested in Hedera and want to multiply your Hbars going forward in order to maximize that return from the Hedera or Hbar token doing very well in the future, NFTs can be a fantastic way in order to do that. Of course, there is a lot more risk when it comes to this sort of stuff, so you need to make sure you're doing your own research. I'm just here to relay some information. It's important to touch upon the foundational work of the development team at 𝗟𝗚𝗡𝗏𝗏 that put all of this into perspective. We can see there were 276,000 plus NFTs now minted on Hedera, cumulative a 300% increase. We can see NFTs minted per month increases over 200% from that June low right the way through to August. We had 64,526 NFTs being minted. The average daily active accounts per month has also increased over 200%. And we're seeing that via lots of the different sentiment rotating through social media. We have seen large swaths of users from chains like Ethereum and Solana, Avalanche, lots of other these big layer ones that have stagnated, moving across into Hedera. A majority of their attention is being captivated currently by the NFT market, which is incredibly smooth in comparison to those existing chains. Another key point of consideration is that the wider NFT market has been in a considerable downturn, both in number of sales as well as its corresponding value. The Hedera NFT ecosystem has shown considerable strength. The Hedera NFT ecosystem as a whole showed consistent growth in defiance of wider industry trends, and it was never more apparent than with the explosive increase in interest and volume witnessed on ZUSE marketplace, which is of course the leading secondary marketplace across Hedera. And of course as well, at the moment, majority of these NFTs for some don't have a ton of utility, but some of them have a lot of utility, and they're the projects I like to cover. For example, the ability to stake those NFTs for additional return on investment, gated access to things like metaverses and Web 3.0 games, which will be going live very soon. These will all be fantastic opportunities, and this is incredibly early, so getting the drop on some of these things could turn out to be an incredibly good decision, of course, if you're doing your own research. Total number of 10 million Hbar transacted on the platform for ZUSE marketplace. It took less than a month to double that figure to 20 million Hbar, but ZUSE wasn't done there, and the summer sun was still comfortably overhead. It took less than 2 weeks for ZUSE to add another 10 million Hbar to its total volume, satiating the frenzied appetites of both the existing community and curious collectors from other networks. Again, as we saw, today, ZUSE's total market volume transacted over 55 million Hbar and continues to rise as network momentum endures. Not only that, we obviously had DeFi and SaucerSwap. That recent MEXC listing has been incredibly successful. We've also seen the token now go live on CoinMarketCap and CoinGecko. Yes, you can now add the source token to your watch lists and track those prices on a sort of market-wide scale. The first decentralized exchange built on Hedera launched to the public. Not only a momentous milestone for Hedera, it should and may in the future be widely considered a momentous milestone for decentralized finance as a whole. From the very first demo, it was clear that SaucerSwap was tapping into a powerful and at the time yet unexplored performance offered by Hedera'S network to provide a DeFi experience that has never been seen before. And of course, I've been covering that right since the beginning, before the NFTs had even really gone sort of live, and showing you guys how to get involved early. Today, SaucerSwap holds over 16 million in TVL. Actually, that's outdated. I think it's approaching $20 million in TVL, and it's facilitated probably in the region of around $40 million worth of trades, accomplished that in just over 30 days, which is obscene. We can see the rankings as well on like DeFi Llama of SaucerSwap climbing ever so steadily as more and more investors flock across to Hedera. For the month of July, DAEA averaged at 471. Recall that SaucerSwap officially launched on August the 5th. Over the next month, DAEA averaged at over 2,000. That's daily active ecosystem accounts, representing a more than 300% increase from the previous month as users piled in. And this is what we can see. These NFTs and DeFi ecosystem developments and infrastructure are what are seriously driving those daily active ecosystem accounts and bringing more and more users across to Hedera as this ecosystem continues to expand. So in summary then, the summer heat comes to an end, and no other layer one has brought fire like Hedera these past few months. In the face of general downturns in the NFT market, Hedera's NFT system bucked the trend and saw consistent, impressive growth with no signs of slowing down today. An increasingly bearish DeFi landscape, SaucerSwap launched with a rapid influx of liquidity and users hungry for a DeFi experience that isn't plagued with restrictive, inconsistent fee structures, slow transaction times, and network outages. Revolutionary ideas enabled by trustless digital systems finally have the necessary infrastructure to show their true value in our increasingly connected society. If this doesn't make you bullish on Hedera and its future, I don't know what will. We can see that as well from the network overview dashboard. If I flick it over to the 1 month time range, we can see we had over 130,000 accounts created, 1.17 million total accounts with 84,000 active accounts across that month. We can also see off the back of that MEXC listing in that 24 hours, the source token was also listed on CoinMarketCap and CoinGecko and exceeded $3.5 million in trading volume on MEXC Global over that 24-hour time period span. Fantastic stuff to see. Interesting thread here as well, written up by Hedera. Obviously, ZUSE commenting on about quantum computers are coming, and Hbar is fully aware of the risks they may pose for cryptography. Luckily, we've got the mind of 𝗥𝗘𝗙𝗦𝗧𝗔𝗠𝗦 to protect us. If I flick across to this, we can see that digital signatures. Baird said that certain upgrades are needed to protect against quantum computers are relatively straightforward, such as hashing. In simple terms, this is when an input string of data of any length is changed to an output of a fixed length. This helps to keep transactions secure, as it makes it extremely difficult to guess the actual length of the input by creating a slightly bigger hash. Baird said data could be protected from quantum computers. The big issue is in digital signatures, which are required to prove each transaction taking place on the blockchain is valid. It's all anonymous. How else would you prove it? You have to prove that you have this key by signing something. Digital signatures are part where this is painful, very painful. Baird said that with larger key sizes, digital signatures can become safe from quantum computers. The issue is the amount they have to increase by. Currently, Baird said a digital signature is around 64 bytes in size, with transactions ranging from 100 to 200 bytes. The Fulcrum algorithm changes this to 1,300 bytes. Fulcrum is one of the 4 encryption algorithms that are designed to be capable of withstanding a quantum computer assault. These algorithms were selected by the US National Institute of Standards. It means you have to send more bytes and you have to store more bytes. You have to process more bytes. Everything is a pain. He added this could cause everything in the blockchain world to become slower and a bit more expensive. However, he believes that over a short period of time, technology advances will make the increased size more manageable. No one is going to die because we have put 800 bytes or 1,300 byte signatures. We can survive. We'll do it. We'll do it 2 years from now when there's an actual standard. There's no particular rush, but we will do it. And of course, this pays dividends for those chains that are already incredibly efficient with today's standards. If you make them slightly slower, they'll still be faster than the slowest chains that currently exist. You compare Hbar to Ethereum. If they both then have to increase size, you're going to see a magnitude of scale increase in delay for processing a transaction on Ethereum, whereas that's going to be a shorter delay for processing those transactions on Hedera. And you can see why having this sort of speed advantage and scalability advantage will pay dividends going forward, particularly when you've got the threat of quantum computing completely upsetting everything in the future. We can see as well a latest milestone coming out of ZUSE Marketplace. 60 million Hbar has now been transacted via ZUSE Market, just continues growing day by day. Obviously, we spoke about the 𝗟𝗚𝗡𝗥𝗥𝗔𝗟𝗦 Ghost Club drop 3 not too long ago. Floor price currently now sitting at 6,850. The Earth airdrop has gone live. That mint was very successful, and you can see the different blimps here. These, of course, all have in-game utility for when that finally launches. The 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 mint, 10,000 NFTs. Not many people thought that this could actually be successfully sold out. Sold out in around 1.5 hours. 10,000 NFTs minted, and you can see most of the supply, I think 70% of the supply, is currently locked up in their staking platform. If you purchase these NFTs on ZUSE Marketplace, you can actually directly stake them immediately and start earning their native PAL token, which will have in-game uses, and of course you can trade it on SourceSwap or provide liquidity if you want to. Some of these are very interesting. There will be rarity information coming out from them soon. On average, I think majority, or if not all of these NFTs were minted at 49 Hbar. So we can already see over 100% increase in the price of these, with some of them, for example, the bodysuits being worth a lot more due to the figures minted. We'd seen previously they're ranging from 200 to 300 Hbar, so a significant increase if you manage to mint a couple of those. And there are more projects in the future. Of course, we've got Hungry Baboons. I know COINMARKETCAP has been dropping stuff in their Discord to do with their Web3 ecosystem and their kind of sort of metaverse type game. It looks incredibly interesting, and I'll be covering that in greater detail when the time comes. And of course, a lot of those NFTs are becoming very expensive in terms of floor prices due to that perceived utility going forward. We can see here Ben is disgusted with Solana and FTT. Ben despises the leaders running those projects. Ben has 1.4 million loyal followers. Ben has a plan. Be like Ben. What is Ben's plan, you ask? If I flick through here, we can see that is to replace Solana with Hbar and replace FTT with ALGORAND, something we've been talking about on the channel for months at this point, going back nearly 9 months to the beginning of 2022, where I started really talking about Hbar, its potential and opportunities going forward. And now we've got some of the biggest creators across the spaces talking about it and putting it into their top portfolios for growth in the future. Right then, wrapping up this video because it's getting really long. something is coming, and this is from Pluto.hbar. I think he's the lead developer over at HASHPACK, which we all know and love. We can see that it's coming, and that is a ledger, and we can see transaction summary, associate token with key #0, and this is of course to do with HTS tokens. So it does appear that HTS or Hedera token a system, or the Hedera tokens themselves native to the DLT, will be able to be stored on a ledger going forward, which is, I know many people have been asking about. As soon as this does go live and it is working, I will show you guys how to use this, how to get those HTS tokens onto your ledger for added hardware level security and encryption. This is a major step forward, and again, should help drive ecosystem developments. Huge shout out to Pluto and the team over at HASHPACK for looking into this and continually driving forward the Hedera ecosystem with these developments. It is a almost thankless job at times, but they are really doing God's work when it comes to improving Hedera Hashgraph. Anyway, guys, I hope you enjoyed this video. If you did, leave a like, drop a comment. Follow me on Twitter if you aren't already. I post lots of different stuff on there. Make sure you subscribe. There's lots more stuff coming in the future. And until the next one, I'll catch you then. Cheers.